sending subtle tremors through the geopolitical landscape. By attending the July 2025 BRICS summit in Rio as an observer, Mexico signals its intent to explore a more multipolar world without abandoning its deep ties to the U.S. president. Sheinbaum's move is pragmatic. Mexico seeks new markets and investment opportunities, reflecting a global trend of diversifying partnerships beyond the West. Sharing a vast border and tightly linked economy with the U.S., Mexico's overture to BRICS is a calculated step, not a break. The Sheinbaum administration is walking a fine line, gaining insight into BRICS while safeguarding its crucial U.S. relationship. For Washington, this is a wake-up call. Even close allies are preparing for a world where power is more widely distributed. Mexico's engagement isn't about choosing sides, but about adapting to a shifting global order. The U.S. must now recognize its partners' legitimate aspirations for economic diversification and a more balanced international system. BRICS has evolved from a loose group of emerging markets into a formidable 20-nation alliance, now including countries like Egypt, Vietnam, and Nigeria. This expanded bloc represents over 4.4 billion people, more than half the world's population, and commands nearly 44% of global GDP by purchasing power. The group's size and diversity give it unprecedented leverage to challenge Western-led institutions like the G7 and IMF. For China and Russia, expansion is strategic, building a coalition of underrepresented nations to counterbalance US and European influence. New members gain access to alternative financing and a stronger collective voice on the world stage. BRICS is no longer just an economic forum, it's a political project aiming to reshape global governance. Despite internal differences, members are united by a desire to reduce vulnerability to Western economic and political pressures. The bloc now has the potential to set new rules for global trade, finance, and development in the 21st century. A central goal of the expanded BRICS is de-dollarization, reducing reliance on the US dollar in global trade and finance. The dollar's dominance gives the US immense power, but BRICS nations argue it exposes them to American sanctions and policy shifts. Leaders like Brazil's Lula and Russia's Putin have called for new systems to bypass the dollar, especially as US sanctions intensify. This isn't just talk. BRICS is building financial infrastructure to enable trade in local currencies. The new development bank is issuing more loans in members' currencies, creating real alternatives to dollar-based finance. De-dollarization is about sovereignty, insulating economies from US decisions and sanctions. By building an alternative system, BRICS aims for greater control over its economic destiny. The dollar's dominance won't vanish overnight, but this coordinated push marks the most serious challenge to its status in generations. A fundamental shift in the global financial order is underway. China leads the de-dollarization charge, promoting the yuan as a global alternative and encouraging its use in Belt and Road transactions. Beijing is diversifying reserves, increasing gold holdings, and reducing US Treasury bonds to strengthen the yuan's credibility. The new development bank, under Dilma Rousseff, pioneers dollar-free financing, like funding Brazilian projects directly in yuan. New BRICS initiatives, such as the Cross-Border Payments Initiative, aim to create a payment system independent of Western control. The bloc's strategy isn't to replace the dollar with the yuan, but to foster a multi-currency system for global trade and investment. This approach allows India, Brazil, and others to promote their own currencies, ensuring no single power dominates. The goal, a balanced, resilient financial infrastructure for the 21st century. These efforts lay the groundwork for a parallel financial ecosystem, reducing systemic risk. BRICS is building the tools for a more independent and collaborative global economy. Washington has responded to BRICS's momentum with escalating threats, especially under President Trump's administration. Trump has threatened massive tariffs, up to 100% on BRICS goods and 25% on imports from Mexico and Canada, to deter alignment with the bloc. The US is leveraging its market power, forcing countries to choose between American ties and BRICS engagement. But this aggressive approach risks backfiring, as experts warn it could accelerate the very shift away from the dollar that the US fears. Weaponizing economic interdependence reinforces BRICS's argument that the current system is unreliable and politically coercive. Instead of compliance, countries may double down on building alternative partnerships and financial systems. The dollar's global status relies on trust and predictability, both undermined by punitive US actions. Such moves could prompt investors and central banks to diversify away from the dollar, not because of BRICS's strength, but due to US overreach. America's own policies may be its biggest threat in this new era. The idea of a single BRICS currency, perhaps backed by commodities, has captured imaginations worldwide. In theory, it could revolutionize trade among member nations, bypassing the dollar entirely. But the practical hurdles are immense. The dollar's entrenched role, diverse political systems, and economic disparities within BRICS make consensus elusive. Most members, like South Africa, see a common currency as a distant goal, focusing instead on expanding trade in national currencies. This incremental approach avoids the complexities of monetary union while still advancing de-dollarization. The dream of a BRICS currency remains a powerful symbol, signaling dissatisfaction with the current order and a desire for independence. Even without a single currency, the conversation itself pressures the global system to adapt. For now, BRICS is building its alternative architecture step by step. These geopolitical shifts aren't just abstract, they'll impact ordinary people worldwide. For Americans, Trump's proposed tariffs on BRICS and Mexican goods could mean higher prices on everything from cars to avocados, fueling inflation. For Mexicans, engaging with BRICS could bring new jobs and investment, but risks retaliation from the US, threatening millions of livelihoods tied to cross-border trade. Globally, a multipolar currency system could make the world economy more stable, but the transition may bring uncertainty and volatility. Developing nations could gain more flexibility, but businesses and investors will face a more complex landscape. The unipolar era is ending. A contested distributed order is emerging. For everyday people, this means adapting to new realities, opportunities and risks alike. The story of BRICS and the US is shaping the future of the global economy for all.